Hi everyone, Rachel Thompson, the Smarter Mortgage Lady here, doing my monthly summary, and I'm calling it Life After Lockdown. So what are the trends that have been occurring over the past couple of months? Buyers are still buying homes because builders are still building them and people are still selling them. And yes, there's lots of discussion about the prices of houses going down, but people are out there trying to borrow money to buy homes to live in. The Reserve Bank of New Zealand changed the LVR or loan to value rules recently, and recently some of the banks have jumped on board and made some changes to their loan to value rules with regards to investors, which is really exciting. First time in years where the deposit now required is only 20% of the property value rather than 30%. And if we look at a purchase price example of 800,000, that now means a deposit is required of 160,000 versus 240,000. And the people that are looking at doing this, a number of people are using the equity, which is the difference between their mortgage and their existing property value. So they're using the equity in their own home to potentially leverage off it and buy an investment property. After spending time at home, people are realizing that maybe they need to add some value and do some renovations, such as changing their bathrooms, their kitchens, maybe adding in some heating, and maybe even their sound system. Some of my clients are using their redundancy funds to pay down their mortgage and reduce their costs, which is a really exciting thing to come out of what has been quite a sad time for some people. Some of my clients are using their flexi facility in their mortgage structure to be able to continue to pay their mortgage while they may have had no income, or rather than having a mortgage repayment holiday, they may have reduced down to interest only and use that flexi facility to be able to manage those mortgage repayments and costs. Some people are using those flexi facilities to take time off, resign from their jobs, and maybe reevaluate what they're doing and where they want to go in the future, whether that means a new job or maybe even buying a business. And lastly, with the current low interest rates of the last 30 years, people are looking at whether they may restructure what they've got, break out of their fixed terms, and refix for longer terms to give themselves some certainty of cost and spread their risk across a number of fixed terms. And some people may even look at moving lenders to see if they can get a better solution. So that's a summary of Mortgage World over the past couple of months in May and June. Look forward to talking to you next time.